Hello guys, this is Progress FS speaking. Welcome to my YouTube channel. If you are new to my channel or if you've not subscribed to my channel, kindly press the subscription button and turn on the notification bell to stay tuned whenever I post a new video. This is Progress FS weekly gold analysis. Like I told you last week, the gold price is going to trade between the area of 1940 and 1904, and of course I told you that the price is not going to touch 1940 until it tests 1904, and should the price broke, that is close below 1904, you should not expect it to test 1940 again. But in this case, you can see that the price tested 1904, of course broke below it down to 1901, and then pulled back up to 1930. So but you can see where the price closed last week. The point here is the expectation at this point is done. As you can see that this resistance area has been tested by the gold price last week, and of course for the price of gold to close above the 31st monthly moving average, it's indicating a possible uptrend. But then you will look at these trend lines. These trend lines, you will understand that the price of gold was not able to break it, which means it's still bearish in below the trend lines, and possibly the price is likely to go sideways before it could break out above the trend line. Before then, let me delete this because it's now backdated, and then possibly show you what the new ones are likely to do. In gold monthly time frame, do not forget what I told you regarding this area, that this particular hammer candlestick for the previous month is a symbolic candlestick, and what makes this symbolic is the fact that it removed the fractal below this very candlestick that was indicating that the price is still bullish, and after which it pulled back to create a hammer candlestick indicating a possible uptrend. So, and I told you that this price, this candlestick, until it broke below this very candlestick, the tail of this candlestick, and close below the tail, you should not expect a bearish movement, a strong bearish movement on gold. But at this point, not until after this month, that I will personally conclude on what the price of gold is about to do coming October. But to me, I am seeing a bullish run on gold come October, but I will not conclude yet until this very candlestick closes. So guys, this is what you should expect on the gold market from 18th to 23rd of September. So by the time the market will open, the gold price is likely to pull up back to retest the previous high, or even break above the previous high of the last week, and then comes back to probably look for a consolidation area in line with this and then goes up a little bit and pull back, or come down a little bit and pull up to break this trend line. That is looking for the area of 1940 or above, but at first 1940 and a little consolidation, then to start looking for above 1950. But before then, do not forget, I told you that whenever these 20 moving averages cross, you should expect at least the price of gold to remain in that direction for a little while. I use the word a little while in this regard because the 20 moving averages are still below the 31st moving average, so there's possibility of them reversing below again. But until the both of them cross it means the price of gold will remain up on uptrend to enable them cross alongside the price of gold. But for them to cross properly, the price of gold is certainly going to come back to retest these 20 moving averages. So this means that by the time the market opens on Monday, you should also continue to trade between the area of 1904 and the area of 1940. If I am asked to say, I will also say until probably the end of this month. But should the monthly candlestick tries to show a bullish signal, then you should expect that the price is going to get to above 1950 area. But for now, I am seeing a sideways movement in the market, and that sideways movement is likely because of this, what happened here. It's likely to start trading above 1920, or do I say between 1920 and 1950 area. So overall, this is the exact format of what you should expect in the market. The price of gold is going to rally on this circle, this enclaves. Just a moment. So the price of gold is going to rally around these enclaves. It will never pull in. Even if it does, it's going to come back. So the price will be, because that is what you are saying here, is going to be in C form, or in cubic, do I say? It's called cubic or whatever form. That is, this is what it's likely forming. So for it to manifest, the price of gold is continuing to fluctuate sideways in line with this upper indication with the arrow lines. So rally like that until probably next month, when the price of gold is likely to spike up. Should what I told you earlier further indicate on the previous month hammer candlestick. So but for now, like I said, because of this area, I am losing my expectation on downtrend. since it will tested the 1904 and pulled up to close above the 31st multi-moving average, indicating a strong bullish movement, which means at this point the ranging, like I said before, will be probably between the 1920 or 15 and 1950 probably. But for now, the price still remains bearish until the 1904 area says otherwise. That is what you should expect in the market, guys. If you have not subscribed to my channel, press the subscription button and turn on the notification bell. Share your opinion in the comment section and always share my growth analysis updates. Bye for now.